What if inflation is not an accident, but a design older than money itself? What if every price rise, every shrinking paycheck, every stimulus you celebrate is not a bug in the system? It is the system. 2,000 years ago, an emperor found a way to give his people more, without actually having more to give. He didn't raise taxes, he didn't borrow from the rich. He simply changed what money meant. And from that moment, every empire, from Rome to ours, learned the same lesson. If you can control the value of money, you can control everything built upon it. The problem of plenty. The year is 64 CE. The Roman Empire glows at its height. Marble cities glittering under the Mediterranean sun. Legions marching home from victory. The streets humming with trade and pride. But beneath that brilliance, the math no longer works. Wars cost silver, games cost gold, and emperors, especially Nero, owe promises to everyone. The army, the people, the gods themselves. The treasury's vaults echo empty. Raising taxes would ignite revolt. Borrowing from the elite would signal weakness. So Nero invents a quieter solution. He calls in the mint masters, leans close, and whispers, "Let's keep the same coin, just less of it inside." The denarius, once almost pure silver, becomes lighter. 94% purity falls to 85. To the eye, nothing changes. To the empire, everything does. He calls it efficiency. History calls it the birth of inflation. For the first time, Rome's prosperity is built not on conquest or labor, but on illusion, on the belief that a symbol is as good as the substance. The domino effect. At first, the trick works like magic. Coins clink in markets, soldiers cheer, builders lay stone faster, confidence swells. Until merchants notice something odd. The silver feels lighter, and so does their profit. A loaf of bread that sold for 1 coin now costs 2. They double their prices. Workers demand more pay. Legions demand raises. And Nero's mint keeps melting. By the time of Emperor Caracalla, the denarius has lost over half its silver. By the 3rd century, it holds barely 2%. A coin that once carried value now carries only faith. Faith in the emperor's word, in the system itself. Sound familiar? Modern economists call it fiat currency. Money that exists because authority says it does. Rome didn't invent printing presses, but it printed wealth all the same. 1 clipped coin at a time. And with each new minting, Rome bought another month of peace. And another decade of decline. The invisible tax. Inflation became Rome's most elegant weapon. It taxed without laws, borrowed without debts, and stole without armies. Every time the silver content fell, every citizen paid. Not with coins, but with trust. A merchant sells his grain and finds tomorrow's coins worth less. A soldier sends pay home to his family, and they can buy half as much. Savings fade, confidence fades faster. So the government changes the rules again. Taxes once collected in silver must now be paid in cattle or labor. Trade slows. Barter returns. The empire that once unified continents through money begins to choke on its own currency. Rome had discovered the invisible tax. Devalue the money, and you quietly harvest value from every pocket. Today we call it quantitative easing or monetary stimulus. Different words, same trick. Parallels in print. Fast forward 2,000 years. The emperors wear suits, not crowns. The mint glows with servers, not furnaces. But the principle hasn't changed. When modern governments run short, they don't cut spending. They create money. Digital ledgers fill with trillions. Charts rise. Confidence surges. until prices follow. From Weimar Germany to Argentina, from the 1970s oil shocks to the pandemic stimulus checks, the pattern repeats. Print too much, prices rise. Print long enough, faith dies. And when faith dies, no economy survives. Rome's coins turned to dust. Ours glow on screens, but evaporate in value all the same. Economies don't collapse overnight. They erode, grain by grain, digit by digit, trust by trust. The social cost. For ordinary Romans, inflation wasn't an economic theory. It was hunger. A loaf of bread that cost 1 denarius became 10. Savings evaporated. Merchants vanished. The middle class, the engine of the Republic, collapsed into debt. Desperate emperors tried fixes. Diocletian issued an edict freezing prices, threatening death for merchants who charged more. It didn't work. Markets froze. Trade fled underground. The black market became the only honest one. Every empire learns the same lesson. When money dies, morals follow. Greed replaces virtue. Shortcuts replace service. And a civilization that once built roads to connect the world can no longer afford to pave its own. The loop. By 476 CE, the empire's silver was gone, its faith exhausted. But the pattern lived on. Medieval kings clipped coins to fund wars. Colonial powers printed paper to fund empires. Modern governments issue bonds, credits, and emergency budgets to fund themselves. Each calls it innovation. Each calls it necessary. Each calls it temporary. And each ends the same way. Inflation isn't a mistake. It's a tradition. A ritual where citizens sacrifice value to keep their leaders safe. The numbers on our screens rise, but the value beneath them shrinks. It's the same illusion Nero sold his citizens, that prosperity can be minted out of thin air. So the next time your groceries cost more, your rent jumps, or your currency buys less than last year, remember, you're not witnessing a mistake. You're witnessing maintenance. The ancient machine still turning. History doesn't just repeat. It reinvests. And it always collects interest. Today, inflation wears a digital face. No longer minted in silver, it's minted in confidence. When central banks adjust rates or stimulate growth, they are repeating Nero's trick with modern technology. A global economy of zeros and codes replaces metal and sweat. The Roman citizen saw his denarius shrink. The modern worker sees his paycheck stretched thinner every month. Rome printed coins. We print digits. Rome taxed loyalty. We tax time and attention. The same empire, reborn in code. Rome's emperors debased coins. Ours debase promises. Different tools, same temptation. Inflation was never just about money. It was about power. And power, once tasted, never retires. If you found this story eye-opening, share it. Because the more we understand the past, the harder it becomes for it to own our future. This is ancient finance, where empires are numbers, and numbers never lie.